a minute, let me ask you this question. Would you rather invest in a company with a probability of getting up to 50% in a year, emphasis on probability, or would you prefer investing in a basket containing different companies with assurance that you will get up to 12% yearly? Before making a decision, listen to this carefully. In the first instance, there's chances that you also lose your capital, but in the second instance, the chances that you lose your capital is very minimal. If your final answer is still the second option, then this video is for you. Have you heard of the term exchange traded fund ETF? It is simply the second scenario that I painted. So you have a basket. In that basket, you have different companies, and by investing in that basket, you are simply invested in all the companies contained in that basket. These baskets are created and managed by investment banks across different countries, depending on what kind of stocks you want to invest in. With ETFs, you need not bother so much about the performance of the market. You don't need to conduct endless research on what stocks to buy. Also, you should consider ETFs if you are saving for the long term. With ETF, you are essentially in between. When the market is red, your losses are very minimal, and when profits are going over the roof, your profits are also substantial, but not as substantial as when you invest in individual stocks. So the best choice is to automate a certain amount for any ETF of your choice. So within the US market, we have the popular one, which is the VOO S&P 500. This contains top 500 companies in the US. We also have VGT, which has to do with information technology companies, and we have QQQ as well. For the Nigerian market, investments in ETF is relatively developing and largely liquid, which means at the time when you're ready to dispose them, it might be difficult for you to sell. But nonetheless, we have like a couple of options. We have Stanbic IBTC ETF 30. We have Vertical Briefing ETF 30, which also tracks like top 30 Nigerian companies. We have Vertical Banking ETF, which essentially contains banking stocks. We also have Vertical Consumer Goods, which contains stocks in that sector. Another option for anyone wishing to invest in stocks but has very low risk tolerance is equity mutual fund. Just like ETFs, the stocks are selected and managed by experienced investment bankers and portfolio managers. So you do not have to keep track of the market daily or read any charts. And it doesn't mean that you will not make substantial profit from this. For instance, AfriInvest Equity Fund returned over 50%, which means that you would have gotten half of whatever you invest in it. Also, Stanbic IBTC ETF 30 also returned over 50%. Essentially, investing in ETFs or equity mutual funds doesn't always mean low return. Thank you so much for watching this video to the end. If you enjoyed this video, please give us a thumbs up. Also, I have a training coming up, a masterclass for beginners, and in this class we'll be looking at different budgeting hacks, developing a side income, and what to invest in, how to choose your stocks, essentially everything, every component of personal finance.